Good morning. This is Tom Alexander. This is the weekend update that I do every week, and on the U.S. stock market, stock indices. Now, I cover other markets as well. Even in this report, the written report, I cover gold, crude, the dollar, Bitcoin, notes, but that's all on the website. If you're interested in that, and again, that's something you can print out and you can look at. Let me show you. Go to, let me share this. Go to alexandertrading.com, and up here you will see weekly update. This is free information. You click on weekly update, and what you will get are the special reports I've done. I've done a couple special reports recently. I also, all the weekend reports are archived in here. If you click on the weekend report, you will get there's a PDF. You can also click here. I neglected to put the video for this. Actually, this is the video I'm doing right now. There'll be a link here, but all the charts that I'll go over are in here. You can go to the website and look at those levels, or you can just print out the chart if you so choose. Okay, let's take a look at the charts now. And we'll start with the SPX. Make sure I'm on the right chart because sometimes I'll talk for 10 minutes and not be there. Okay, we are. Okay, so this is the SPX. We are up over 6% from the January 13th low in just vertical fashion. There are four gaps below. Now, I'm not one that gives any special magical attribute to gaps. Gaps generally do get filled for a variety of reasons. There's no magic involved. But what this is showing you, the fact that we have four gaps, is that this is just in a panic, manic phase of bid market in this particular index. The index is not quite traded to a new high. The SPX is the only one of the primary U.S. indices that traded to a new all-time high last week, which is something to watch going forward. In bull markets, you want to see all of them generally in lockstep at new all-time highs. They don't have to do it to the exact same day, but uh, we're overdue for a pullback here. And then following that pullback, what you would hope to see is that the others begin to follow through as well. So this is something to keep an eye on in terms of the bull market, bear market debate. Everybody wants to predict the all-time Armageddon high and looks at every single reason, such as this current divergence, as being that reason that we're about to decline to zero. I don't know if we are or not. I sort of doubt it. But anyway, I do think that we are overdue for some sort of retracement. But this is the SPX. It has led the charge higher. Let's take a look at the index. Uh, Here's the index. And these levels that I have highlighted here are your quote unquote resistance and potential support levels. And again, you can access these by going to the website and looking at the report on the website or printing out the PDF that is on the website that you can access. Uh, the markets are so vertical, it's difficult to identify real good downside levels. The obvious levels, which are the levels that everybody will be looking at, are these gaps that I have highlighted on the SPX. So this is the index. Let's take a look at the Dow, and you can see that there's no way I can identify a high probability downside level. The levels are clear in the SPX. That's what I'll keep an eye on. But the Dow is up 6.5% off this January 13th low. There's been no rotation, none. No day-to-day rotation like you see here, like you see even in here or here or here. That's abnormal and it will change. We may go higher. We're not going to go higher at the current rate of change. Okay, there's the Dow. Let's see, the index, the Russell. And the Russell is lagging as usual considerably. And then the New York Composite is also, it's up not quite 6.5%. And to the downside is a guess. It's just extremely vertical off of this high. All right, I want to take a look now. I want to show you guys some technical stuff that I put in the report every week and that I watch. I don't use a whole lot of stuff in my analysis. It's all auction market price-based analysis. Now, I do use market-generated information, NYSE data in particular, and in particular, NYSE advancing issues. The blue histogram down here is breadth. It is the net. What you see here is net closing breadth, NYSE advancing minus declining issues. I think we've had positive closing breadth now like 8 out of the last 9 days. That's getting stretched. You can see the 5-day moving average reached a peak on last, what's that, Tuesday? Tuesday, and has rolled over a little bit. The 10-day can move higher to get to an absolute upper extreme. However, even in bull trends, even if this market is going a whole lot higher, this is also something else that is flashing caution a little bit. Now, I want to show you a more granular view of this, and this applies more to the shorter term. This is breadth. Again, this is a 30-minute chart of the SPX, the S&P 500, breadth below the net of NYSE advancing minus declining issues, just plotted as a graph. And you can see we're making higher highs. This was the momentum peak so far in this rally off of the January 13th low. Right here. And you can see that's the highest reading in breadth. It's actually the highest reading in breadth we'd had in over a year at least. And since then, we've made higher highs. We're making lower highs in breadth. We made another higher high on Friday on lower breadth. Now, something else to make note of, and if this isn't part of your analysis, it should be. I don't care how complicated you get, if you're using complicated formulas, if you're using magic numbers. There is nothing more accurate than what I'm about to tell you in determining a trend. When a market is making higher highs and higher lows, the trend is up. When it's above moving averages, and these are moving averages that I use, pick to, it doesn't matter as long as you use them consistently. When the market is making higher highs and higher lows and it's above moving averages, the trend is up. Vice versa, the trend is down. It's that simple. I don't care what magic you use, that magic will not supersede this reality. So we're still making higher highs and higher lows. There is coincidentally a little pivot here that would also be into this gap. So that's something we'll keep an eye on, even in Globex, when we begin trading on Sunday evening. So we'll see. One last thing I want to share with you. This is a longer term picture and more of a concern longer term. And this would go on the bearish side of the ledger in terms of an intermediate term view. This is the accumulative advanced decline line down here. This is price. You can see so far we are not confirming the new all-time high. Now, we just made it last week. This divergence can be erased by continued strength next week. But when you have this type of situation, typically it's going to be resolved one way or the other. We're going to get could get some sort of significant correction, or we just have a minor correction here and then we rip off to the upside, followed by the advanced decline line that eventually follows through and makes new all-time highs. Okay, guys, I hope you enjoy the rest of your day. If you enjoyed this, please subscribe, please like. It helps with the algorithm as I try to grow the channel. Have a great evening, and I will speak with you again very soon.